Hi there, traders. This is Brad Gilmore with the Daily Market Insight for Thursday, the 22nd of June. Right, as we come into the Asian session, let's just check out what has been the dominant impacting events. Now, Powell is testifying in front of the Senate Banking Committee. Now, he's come out a little bit less hawkish than what the market had anticipated, right? Saying we need to raise rates, maybe gradually, but really keeping a close eye on the data. Instead of maybe 2 rate hikes this year, they're sort of maybe scaling it back to 1, and that saw a bit of pressure on the dollar. Now, with regards the Canadian dollar, the retail sales figures much better than expected, which does put a bit more pressure on the Bank of Canada to potentially raise rates, and that saw dollar CAD dip to the downside. And sterling, well, we had the CPI, RPI, and PPI data out yesterday. The CPI numbers much stronger than were on the top end of expectations, whilst PPI was dramatically weaker, okay, which means forward inflation probably going to start dropping. So that's going to make today's Bank of England decision a little bit tricky, and I'll explain that as we go along here. But let's just have a look at those charts. If I just come into the currencies here, just to give you an idea of what these events, what they mean for us, right? So the weaker dollar, the less hawkish power, is giving the dollar a little bit of a weaker tone, right? You see dollar Swiss lower, even dollar CAD, right? So dollar CAD had 2 things working for it. The Fed or Powell's, less than hawkish statement, as well as the very strong Canadian retail sales figures. So a bit of a double push there for dollar CAD. That's an easier trade. Sterling, well, here's the price action around the CPI release. It popped up to 128. Then dipped down. Now it's back to exactly where it was. This is going to make today's Bank of England interest rate decision, statement, and then press conference very tricky. Now, the Aussie drifted lower, okay, after the RBA minutes, but we are starting to see that little bit of dollar weakness pushing Aussie and Kiwi back to the top side, as it did for sterling there as well, right? So these are the main events, right? These are the instruments that we're looking at. Now, just having a look at the global markets, right? So the dollar's lower on the back of Powell sort of not being as hawkish. To me, that would mean, generally speaking, equity markets should rally. But you know what? They're not. So this is like a little bit of a heads up. They're having either a little bit of a rest, right? A little bit of taking profit, okay, ahead of any major sort of numbers. But to me, it sort of doesn't match up with a less than hawkish statement, right? If anything, looks like the market's long, fatigued, and maybe just cashing in. Now, on the other instruments here, gold, well, a little bit of a little stop loss run to the downside, but to me, the writing's on the wall. I can see gold heading back down towards 1900, and oil just starting to make a few headways to the top side. And once again, that helps the dollar CAD move to the downside. So a less than hawkish Fed, strong Canadian numbers, and a rallying oil. That means a lower dollar CAD, right? So dollar CAD has got to be sort of on your radar at the very least. And if you're trading the cryptos, well, I'll tell you what, they've gone for a massive run there. Very hard to overall predict what's going on. So what does that mean for us on a global perspective? Now, if I just come back to my global financial markets page, which I've updated yesterday. Now, sort of just connecting the dots, right? So the equity futures, US equity futures, a little bit positive. Is that running off into the risk on, risk off pairs? Well, a little bit. You got euro going up. I mean, the clocks have just changed over here, so it's not a good reflection. But basically, euro, Aussie, Kiwi up. I mean, sterling's just drifting sideways, and you're going to expect that leading into the Bank of England, right? Out of all these major pairs, and I've got a few extra instruments here on the majors, I like to see outlier things that are going on that don't make sense. Dollars are, right, the South African rand is down 7% for the month, right? That's something weird going on, and there could be opportunities for a retracement there on those instruments. So just keep an eye on that as we go forward. Now, I just want to tune you up into where the action's going to be today. Now, if I just come back up here, have a look here at these retail sales figures. Okay, compared to the consensus, as you can see, they are much better than expected, and that's what's pushed dollar CAD down, obviously, as well as Powell's less than hawkish tone. Now, as we come into today's trading, right, there's a couple of things to really isolate. Now, obviously, the Bank of England is a big event, 0.25% factored in. Now, with the yesterday CPI numbers and the strong CPI, exceptionally weak PPI, it's got a very confusing picture. I think this is going to be one of the trickier events to trade. We do have some technical levels to work with, but you know what? Are we going up or down here? It's almost too hard to call. Now, one thing I would like to highlight and just keep a very close eye on is the Swiss National Bank, right? These guys, I mean, they only meet a few times a year. A 0.25% interest rate hike is expected. They do have a press conference. There's no sort of scheduled time for that. So just be aware. They often do very strange things outside the general consensus, right? So I'll be paying attention to the Swiss and the Euro around that release time, right? And then you've got obviously Sterling and the Sterling crosses coming into play on the Bank of England. This is where you come back and have a look at some of the Sterling crosses and really pinpoint the ones that have been pushed to extreme levels, either strength or weakness as far as Sterling goes, and you may be able to pick something off here. Now, just in amongst this, there's other things coming out, right? The weekly jobless claims numbers have been having a bit of an impact as we go through each week. Now, this is a weekly number, and it used to be inconsequential. Now the market is sort of feeding on it somewhat, so just be aware of that as well. And you come back down here, it's day 2 of Powell being wheeled in front of the Senate Banking Committee. So will he change his story? I don't think so. So there's usually a speech and then there's a Q&A, right? That's where that comes into play. And keep an eye on the existing house numbers. We did see the building permits earlier in the week really strong. Now you want to see if that matches up with this this release. Okay, if it does, well, it should see the dollar come back a little bit. Then you got the oil stocks. Changes there can impact the price of oil there as well. And that's pretty much all we've got sort of for that, right? So there's a bunch of things here. To me, the potential shock data release here could very well be the Swiss National Bank, right? That's something I'm not necessarily nervous about, but very conscious of, that these guys, they play by a different rule book, and it could be, you know, a little bit loose. The Bank of England, well, they're a bit more methodical, but they've got their hands full trying to translate really strong inflation, really weak PPI, strong RPI data, and everything else going on. It's almost like the press conference could be up, down. I'm expecting large volatility because it's not as clear as day exactly what they're going to be predicting for the future. What is predictable is 0.25% has been factored in. If they raise by 0.5, well, sterling will shoot to the top side. And then you're going to watch the statement and press conference, right? So there's a lot of different events here. If anything, the European session is going to be very active, obviously, and you've got Powell speaking, some consumer flash confidence numbers there as well for Euro. So Euro, sterling, definitely in the firing line. It's going to be busy. There's going to be lots of stuff to try and translate. The best thing you can do is when you do come back to your key instruments, right? Work out where you are. Obviously, it depends on your location, where the busiest time of day is going to be. I can tell you what, London is going to be a very active session, as it generally is, but generally around these European crosses, at the start of the day, you're going to see a lot of activity. So for those traders who aren't aware, the start of the, let me just change that pen color, it's not exactly clear. The start of the European day, okay, that's when the UK data comes out. Then you've got the US market coming in around midday, and that's why you've got the middle of the most of the day there in the UK session, very active. All right, so anyway, that's the what I would be looking for. Now, just coming back to the global markets here, right, and just trying to pinpoint, as I was saying, like dollars are, anything that has very like huge variance, like in the short term, it's of interest to me, right? Because it must mean there's something very weird going on, or you may see some sort of opportunities for corrections, right? So just keep an eye on this as we go forward. Keep an eye on the equity futures as you go through the Asian day. If they continue to rally, you would expect, like we are seeing here right now, Euro, Sterling, Aussie, Kiwi going up and the dollar pairs going down. And that gives us a risk on day, right? Gives you a little bit of confidence going into the markets. When it comes time to be trading the Bank of England, check out sterling, right? And you can start to see here, sterling against the crosses, what is performing very well, month to date, 3 months, year to date. Okay, it can give you some perspective in which pairs may move further, right? Sterling yen, okay, it's up 4.4%. Look at it compared month to date against the other pairs. It's up 2.6% against the dollar, and the rest of them, well, not much, right? So maybe sterling yen is the pair that's been stretched too far, or maybe not. And then that's what you want to want to be looking at. And also, don't forget the Swissy around the Swiss National Bank, I should say, around their releases. Obviously, the yen crosses have really gone a long way. So you'd expect those to correct at some stage, but you know what? We have to wait and see when that sort of all kicks into gear. So there we are, guys. It's and there's the, sorry, just to show you there's the yen crosses. As you can see, most of them are up 4 to 5%, with dollar yen the odd one out. All right, and that's probably more of an interest rate carry trade than anything else. So lots going on. As I said, go through your calendar, isolate what's going on. Now, if you don't have much experience and you're looking to trade actively the Bank of England rate decision, well, you're sort of missing the main event, because this is predicted. What isn't predicted is what they're going to say, right? And that's where the movement comes from. You can't see that, right? So you have to sort of get yourself organized for that. And you can go to the central bank pages to keep an eye on that. And as I said, the left field dark horse for me is the Swiss National Bank. And then once we get through that UK session, we'll start to look at the US numbers, and in particular, what Powell has got to say. So there's plenty of opportunity for the dollar to sort of whip around here on the jobless claims, see what Powell's got to say, and then also the existing home numbers. Okay, so all in all, this is a pretty busy day. It's just a shame that the numbers yesterday out of the UK, if I just sort of scroll back up here, were so erratic, because it really sort of spoils things somewhat. There's the weak PPI. You got the strong inflation numbers. It's a bit of a dog's breakfast. Very hard to determine. They're definitely going to be looking to raise rates, and they want to, see inflation fall. PPI suggests it will. So do they factor that in or not? Anyway, I could talk about it for another 10 minutes, but I don't want to bore you to tears. Just keep an eye on these things, right? So if you do have sterling positions, right, just be aware these events are coming out, and you could get some whipsaw price action around those events. Okay, that's the key to it. And I want to stop you trading. I just want you to be aware of where pressure points will be, potential major shifts in momentum, and big shifts in liquidity. And that's where you see things whipping around the place. All right, guys, good luck. All the best. Cheerio.